Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, the 16th day of September 2014, and this is the daily report for gold and silver. We do have nominally higher pricing in the precious metals across the board today. Gold currently trading at $12.35 and change, puts it up roughly $270 on the day with a low of $12.31.10 and a high of $12.42.90. Silver also trading higher this morning, up around a nickel, 5 cents on the day at $18.70 and change. The low today, $18.52, the high, $18.98. More on silver in a little bit. So traders, if you recall from yesterday's show, as well as the trade alert that we sent out on Sunday, I talked about lowering our stops from 61, which is where we had the original stop, to above 41. And when I had our show yesterday, I talked about the fact that what I was trying to protect was really this area right in here. This was that most recent bottom we had just prior to this $100 rally. And my sense was that if this market is going to continue lower, even with a little uptick and then moving back down, it really shouldn't veer too much into this particular area right in here. And so that was the reason for placing it above 41. When we look at these most recent highs right in this area, you can see that these highs are coming in at around right in here at around 41, 41.50. You had a tick of 42, but your stop should be, as I said, above this area. That's what we talked about yesterday. So right now we're looking at the market currently trading up a couple of dollars on the day. We had the dollar index soften on the day, but we had a tremendous move in the equities markets with both the Dow Jones and the Standard & Poor's 500 moving substantially higher, 100 points on the Dow. So my sense is that even under pressure, my belief would be that we'll see possibly a small clip right in here, like we saw here, or a small clip like we saw here before heading back down. Now, the reciprocal is also true. If we see this market trade up and really break hard above this point, we probably have seen support come in at 12.31, and this would be our new level of support, which is roughly at around 12.44, 12.45, where these bottoms are here, and that's why we suggested placing our stops really above this mix right here, really above these lows that you can see by the tails of these candles here. Now, I've pulled up the Standard & Poor's chart. Although we're well over 17,000 in the Dow Jones Industrial Average, we still have yet to take out these record tops that come in at around 2010. You can see that right here. But you can also see this market after a dramatic climb, a small retracement, beginning to move back up. So traders, all I've done is added a Fibonacci retracement, very loosely drawn in, but it's a Fib retracement that starts roughly at the bottom or beginning of this rally up till the top. And when we look at the 38% retracement, it comes in roughly at 1965. So you can see that we've come close to that retracement. Once again, what we're looking at really is a very shallow retracement as this market continues to higher ground. We've seen it time and time again. As the market comes down, it retraces a little bit, moves up, it retraces a little bit, and so forth. Now here we had a sizable retracement back really at the end of July. But since that time, we have exceeded that. We've moved to record territory in the equities markets, retraced a little bit, but you can see with this dynamic day here, it does appear as though it is making a challenge, or a run, I should say, for these record tops as the Dow Jones Industrial is. Now, if we look at our gold chart through the eyes of a Japanese average chart, there's no doubt we're still in pretty solid red. If you've noticed over these last few trading days, we continue to have an absence of upper wicks, and simply what that means on the way down is at no point did the price point go into the midpoint of the prior trading day, and in fact traded at or below at all times. Also, candle size, and this is even with the last couple of days being up, because again, we're comparing them to the midpoint of the prior day. Even with these slight upticks, we're still looking at pretty solid red. And so for that reason, unless we see some sort of dynamic breakout above the, call it 1241 to 1245 area, and then find support there, I still think the opportunity in terms of the direction, overall direction of gold is going to be lower. Now, this is our 2-day chart that we have used with an Andrews pitchfork. And if you recall, when it appeared as though we were moving into some sort of a bullish scenario, we put in a bullish pitchfork. However, it broke immediately through. But here's the interesting thing. This is the 0 prong of our primary bearish trend, our handle, of course, and our 100% prong. This market comes up and goes right to the handle, really, of this bullish pitchfork, comes back down, breaks through there quite easily, as you can see, and is right now teetering at this particular crossroads right in here. And so that really tells me we can look for a bounce here, but that bounce itself is still within the confines of a bearish move down. And then lastly, silver. We have no open positions in silver right now. We've put in, this is simply a horizontal line. There's no Fibonacci numbers attached to this whatsoever. And we really based it upon this most recent low that we had here. We can see points in which it matches up, but really no cigar there. In other words, we're not really looking at anything but this particular low here. The fact we calling that area about 1880. We need to see the market move above there before we can get bullish in any way. If not, my sense is it's going to make a play for these lows down here at around 1820. My recommendation is to maintain our current short position in gold, sidelined in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.